Hello, everyone. This is Noah and John, and we are from UrbanDigs, and it is Friday. You're going to get your weekly Manhattan market update. John, let's get right to it. We're looking at supply. We came in at 93.43. We're keeping steady. Show me the chart.
Well, there you go. That's basically it's unchanged in terms of percentage values from the week before, but it looks like it's about 20 listings higher. So we're getting to that point where I think active listings have finally stopped sort of piling into the active supply number, and we're just sort of bouncing around sort of at this minimal level, waiting for the active season to kind of wind down.
Yeah, and we kind of thought we were going to turn the corner and go down. The fact that we didn't turn the corner and we stopped so soon and we're going up a little bit, that's a little strange.
Yeah.
So let's see what happens there. Anyway, moving on. Pending sales. Where we come in? 25.12. Johnny, show me the chart. Where are we at?
Well, again, that's an increase from the previous week, about 5% or so, and it jives with what we've seen over the last several weeks. We've had a lot of contracts signed, so that number is going to continue to increase, which is nice to see.
Yeah, and I'm hearing from a lot of anecdotal stuff, a lot of sales managers, a lot of agents I'm talking to. There is definitely a pickup in activity. There's a pickup in buyer inquiries. There's a pickup in traffic. There's a pickup in bids submitted, and deals are starting to happen. John, I want to take a quick look before I go on to the weeklies. Monthly contract activity came in at 874. Monthly new supply came in at 1726. Make a mental note of that. All right, I want to go to the 1 weeks, and we'll get to that in just a second. Okay, so 1 week actives. Where are we? Ding, ding, ding. How many we bring in? 299. Show me the chart.
Well, it's basically the opposite of what last week. We dropped 31% last week. We basically bounced back that 31% this week.
Yeah.
That could be what's pressuring pending sales to sort of remain high. But I mean, look, we're back under 300 listings on a weekly basis, which is a good place to be as the active season starts slowing down. And let's just kind of see, as these numbers start filing in, what the trend is.
Yeah, strange, unexpected, but this is what it is. This is why we do it. And if I had to interpret it, I mean, it just tells me that there's a little more pressure for supply to just not go down. So let's just keep an eye on that. Very, very interesting. Moving on to contract signed, 1 week of measure of demand. We love it. Ding, ding, ding. Where we come in, 190.
190. I mean, look, we're near 200, which I think is what the number we like to see. We got a couple weeks over there, but look, as we mentioned earlier, I think the active season is beginning to wind down.
Right.
Just in terms of the calendar season, that's where we are.
Yeah.
Let's not forget we have fears of a second wave. It seems to be encroaching daily, so that could be putting a pause on what's happening. But the question remains in the weeks coming is what's left. Do we have any momentum here to get us through to the dark winter that's coming?
Yeah, and not only that, that's a very good point, John. But we're also mid-month, right? And I want to just do something I usually don't do, but I want to switch this to a 1 month view of contract signed to give you an idea of where we're trending. Remember, I looked before we came here. We're at 874 monthly contract activity. Well, when I look at a 30-day pace right now of contract signed mid-month, we're at 950. We're at 950. Which is above pace of where we are. So if the month were to end right now, even though it's not, we would book 950, which is a great number considering. I mean, you get to near 1,000. I mean, we almost get to 1,000 in the active seasons in non-COVID kind of markets. So this is what's pushing pending sales higher. Now, when I transfer this, sorry, John.
No, I was going to say, my guess is those 950 are most likely sort of on the front end of the curve. And I think for the last week or so, last couple of weeks is a little bit lighter. So it's a little bit, I think, sort of tipped toward the mid-October contract signs.
Right.
As I think we're starting to wane off, but it's a great point.
Yeah, that's very true. And if I switch that to active, Johnny, we're at 1446. And if we think about where we were in the charts right over here, we're at 1874. So it's an interesting look point. So I look at these right here. Monthly new supply 1726. That is heading lower. Monthly contract activity 874. That is trending higher. That's the general point I'm trying to make. I think that we're at the turning point, the inflection point, at least temporarily. This cycle might have multiple inflection points, but we're at one inflection point where I think, again, what you're seeing out there, the supply out there, is probably the max of what you're going to see out there this cycle. The fact that we're turning around puts that into question. We'll keep an eye on that. But demand keeps coming up. So we'll see what happens. John, I got some interesting stuff. John, I have a couple of charts right over here. Listen, everyone loved this chart. We showed it a few weeks ago. This is monthly contract activity by price point, okay? By price point. So we're showing you all the different price tiers over here. You can see under $1 million in blue, over $1 million in green, right? And what I love about this chart, the last time we did this, we did 1 year. We did 1 year. So this is now expanding. Everyone said, could you show us back to 2015 and show us where we are based upon the cycle? This is that chart, John. Now, when I look at this chart, okay, not only does this whole COVID mess just it's completely off the charts, right? If I went back there, we'd have to go back to the great financial crisis to get back to those kind of levels, right? But here we are, this recovery that we had, it's just, and I think about where we recovered to, we kind of recovered to last year's lows.
Yeah.
John.
No, you're right. I mean, last year, right around that time, right around this time last year, we put these records into the books, and that we kind of started turning around after that in terms of market activity. It seemed like that was sort of the bottom. So we've kind of come back to the bottom.
We kind of come back to the bottom.
I think what's an interesting thing to me is when I look at this chart, when I see where we are, most October, Novembers are followed by slow Decembers and slow Januaries in terms of activity. So we're at a peak right now, and it's going to be followed by a trough. And I don't think we're going to see a trough like we saw in March through June, the COVID trough. But I think we could see a bit of a drawdown coming into the next few months here.
Right. But I want to make one extra point. Okay. We started and we looked at a 30-day pace, and that 30-day pace of contract sign was at 950. Okay. This is only showing last month. So if this is now going to go up to this level over here, I'm not going to draw the whole bar. This is yet to be booked because November's yet to be booked. Look about where we're going relative, right? We're starting to get back to early 2019 into like early 2018. I mean, somewhere around those kind of levels. But like, here's the peak. So like we came down. We had a COVID crash, and we're having a COVID recovery. And I don't know how long it's going to last, but like we're trending to come in at around that mark.
Yeah. Well, so let me ask you this, Noah. Given what you've seen here, if you see this level of activity, and given what we just talked about a few minutes ago with the active season winding down, what's the play for a buyer here? Do you pull the trigger, or do you wait, assuming that it's going to be easy hunting?
As a buyer, what you see out there is probably close to peak supply. So as far as sell side competition, as far as options from the buy side, like what you see out there, you have a lot of leverage, you have a lot of options. I don't see that getting bigger. I see that, if anything, getting smaller, right? Now, that's what the data shows now. That could change. We're going to keep an eye on that. But as far as I'm concerned, that looks like it's going to come in a little bit. So now, if the sellers that are going to go off market, John, we're heading into an off season, right? We're into Thanksgiving, December holidays, into mid-January. We come back in February. If the sellers are keeping their listings on the market, John, they probably have to sell. They probably need to sell. So if I'm a buyer, I'm hunting. I love that. Hello, I'm hunting all day long going into this offseason.
I think you're right. I think we're going to see a decrease in activity. I think we're going to see an increase in price cuts and listing discount over the winter. Yeah. But I do think that, given everything as it is now, let's assume that we make it out of the winter. I think we're going to see a nice rebound of activity come February, March, assuming rates are low and there's still an outlook for Manhattan.
That's right. We just got to get there. We got to get through the winter. So that's one chart. Now this is another one. We're going a little long today, but I want to show you one more chart, John. This is fantastic. All right. We are now showing you, all right, the bars are showing you Manhattan average days on market versus Brooklyn average days on market. Okay. Right. So we're comparing Manhattan to Brooklyn. We all know Manhattan has been underperforming and Brooklyn's been overperforming. That has been the narrative. Just like the suburbs have been overperforming and the dense cities have been underperforming. That's been the narrative. What if there's a rotation change? What if something is going on? We're also tracking the lines are Manhattan average price cut to Brooklyn average price cut. Now, first, I want you to look at the bars, the yellow and green bars. That's days on market. John, everyone knows days on market was shut down and reset. The ticker was stopped. And so if I go to UrbanDigs, the days on market's low. This does not look at that. This is as if that ticker kept going. Okay. So where would days on market be? And if I look at Manhattan, we're at 101. And where are we at the height of the COVID crisis? 112, 122, 119, 146. Now this is average. UrbanDigs has median on its charts. This is average. So it's a little higher, right? Median would be lower. But the point is that days on market did not spike up during this COVID crisis. It continued. Days on market continue to kind of step down. If you follow my black line right over here, and now it's ticking back up a little again, but 101 days is where you're at. Yep. Sellers kind of need to know this. More importantly, the price cuts. John, you see something with the price cuts, so tell me.
Well, what I think is interesting here is, I mean, first of all, the days on market point's excellent. The Manhattan days on market since July has remained somewhat stable, and Brooklyn, the quote unquote hot market, is seen a bit of an increase in days on market. And if you
Yeah.
couple that with these lines, and these lines are showing average price cut, look at that spread between the Manhattan line and the Brooklyn line. So the Brooklyn line is the red line, and it's coming up. It's simply signifying that price cuts are gaining in terms of their percentage. We're not talking a lot of percentage here, but they are increasing, whereas Manhattan's coming down. So
Yeah.
I'm wondering, just like you are, I mean, hey, listen, are buyers starting to reevaluate sort of the idea of what the value is here? Because we're starting to see properties linger a little bit longer in Brooklyn, the asking prices get cut a little bit more. At the same time in Manhattan, I mean, listen, days on market, Manhattan's struggling compared to Brooklyn. There's no doubt about that. But it seems like with the price cut starting to get a little bit less, it seems like the buyers might be starting to pick over some of the remains of the great values there.
Yeah. Yeah, that's what it looks like. It looks like the buyers are coming in, and the window of opportunity in Manhattan is starting to shrink just a little bit. You know
Yep.
what I'm saying? Whereas in Brooklyn, it's starting to reverse course a little bit. The
Great point.
rotation trade, it's very interesting. This is very early data, very preliminary, but the data is what the data is. So I love it. John, I know you love it, and hopefully the viewers love it. So any final points?
No, I would just say, if you haven't subscribed to UrbanDigs, please do. This is what we do, and we just try to give it to you because this is really cool stuff. I don't think you're going to see actually, raw, untouched days on market anywhere else.
That's right. And if you want these charts, I'm going to put it in the UrbanDigs forum. Check out the UrbanDigs forum. We are talking always there, 24 hours a day, 7 days a week. That is John Walkup. He is the chief data analyst of UrbanDigs. I am Noah Rosenblatt. We are both from UrbanDigs, and this has been your weekly Manhattan market update. I wish you guys a happy weekend and have a great day.